how to submit a value reconsideration. This is going to be more of a hot topic on talking about the Dodd-Frank Financial Reform Bill appraisal section. So Crystal, who's typically with us and does the introductions and helps us today, is unavailable today due to another webinar training with a client. So you've got me. So let's go ahead and get started. I know there's a lot of controversy surrounding the Dodd-Frank. The whole bill itself is quite fairly large, but specifically the appraisal section and stuff like that. So we're going to go ahead and get started. And I'm sorry, but Crystal could not make it today, as she typically does. So Dodd-Frank summary, bottom line. This is just kind of a general overview of the entire bill. The SEC, again, there's probably, I think, 5 or 6 agencies involved regulating the mortgage banking industry, and this is kind of with thousands and thousands of rules and pages of regulations, but this is kind of just like a general summary bottom line. Security Exchange Commissions will issue some 100 rules for derivatives tradings, credit companies, stock brokers, hedge funds, and corporate bonds. The CFTC, which is the Commodities Futures Trading Commission, will write about 60 rules that it oversees with the SEC exchanges, clearinghouses, capital reserves, and record keeping for derivatives for trading. The Federal Reserve's regulating will systematically risk default of the Fed, which companies write about 50 rules, including proprietary trading limits for banks. The FDIC will also be involved, as well as the Treasury. It really looks like there'll be a rewiring of Wall Street, meaning basically, to a certain extent, now this is not wholly, but basically if you look at the way the Dodd-Frank is set up, there's really not a industry that has to do with financing or trading or this type of security license that's not going to be touched or not going to be affected by this. That's good and bad. One of the things specifically that we're going to be talking about is the Fed ruling on the appraisal process. The Fed's published an interim rule, which is amending Regulation Z of the Truth in Lending, and the rule is Section 129E of the Truth in Lending Act. Section 1472 of the Dodd-Frank establishes new requirements for the appraisal independence for consumer credit transactions secured by a principal dwelling, which essentially means any loan or consumer finance credit transaction that's secured by a house. So that includes home equity lines of credit. That includes a really ton of different things. It's really something where the previous regulations only regulated a very small sector, where like the HVCC was Fannie Mae. Some of the other OTS and OCC regulations just required on certain loan limits and things like that. This is all encompassing, so it's a little different deal. Would recommend reading all 103 pages of the bill, as there are a lot of language and small things there needs that you as a lender you will need to, or your AMC to change, or if you do it in-house you need to add to the process. This is not business as usual for the HVCC, and now we're going to call it the Dodd-Frank. And the reason is a couple things. Where now it becomes law. It's much difference between regulation and law. Where this is actually becoming a law, and then also the fines and punishments for violating it are much more severe than the HVCC. There's a lot of disclosures and click-through pages, languages that are all within there. But we couldn't possibly go. We're going to go through some of them. We couldn't possibly go through them all in this brief time we have, but it's definitely something that I recommend reading, and it will add a lot of insight. It's no longer the HVCC violation, but it becomes unlawful to violate the new bill. The bill attached hefty fines by day. It's anywhere it's up to $10,000 for the first day, and then $20,000 per day subsequent after that. So you must work very closely with your AMC or in-house process if you can provide a compliant solution that makes sense for your business model. Intended is to ensure very spirited of the HVCC, intended to ensure the real estate appraisals used in the support creditors are unbiased. They want the real deal, and it's come to the conclusion now where they really want to know what the value of the property is. They really want to know as much detail as possible what the value of the property is, and they want to make sure that that appraisal, regardless of its right or wrong, regardless if the appraiser is aggressive or conservative, is a totally 100% unbiased opinion of that property. The changes will become effective immediately. However, they're optional until April 1st, 2011 to give adequate time to adjust. So they're effective right now. It's just, you're really given until April 1st, 2011 to rearrange your processes and procedures. It's very similar that, anybody who's going to prepare evaluation may not have an interest in the financial transaction in the property or the transaction. The bill does not, this is kind of huge because the bill does not expressly ban the use of in-house appraiser or affiliates. However, there is language about indirect financial interest that some people are interpreting as people banning from using in-house appraisers or affiliate appraisal management companies. And the reason they're saying that is, okay, if you have an in-house appraiser that's in salary for the company, there is an indirect financial interest in him approving the loan, because if he doesn't do the appraisal and approve the loan, the bank doesn't make any loans, and if the bank doesn't make any loans and he doesn't make money, then he doesn't have a job. So they're wiring it down to that level where you would almost need kind of a separate entity in itself to manage it in-house or as an affiliate appraisal management company. I think some lenders have done that, where they have really a true separate company, and I'll get into some examples. And then some of them are very, 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 very not set up properly at all. Appraisals must be paid reasonable and customary fee, which is going to be determined by the independent private sector. This is huge, 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 and those fees are not yet released yet, and we don't know when they're going to be. They're going to do like surveys of what the appraisal fees should be in certain areas, and then that's going to determine the customary reasonable fee. That's a lot to do also with disclosures on accepting the order, who the actual appraiser is, on making sure that that fee is customary reasonable for the area, because again, you can think about nationwide, and most lenders or banks are doing loans nationwide. They've got thousands and thousands of counties in the United States of America, all that really do have different fees. So if you were doing an appraisal in, Bristol, Virginia versus, Orange, Virginia, it's very different fees. So Bristol is going to cost you $600-700. Orange, Virginia is going to cost you $300 or $400, and from an outside person who's from California, they're not going to know that that's not a $500 is not a customary reasonable fee in Bristol, Virginia, and so there's going to be kind of some and maybe some problems with that, because the appraisers could say, well, this is not customary reasonable. The surveyor could say that is customary reasonable, and there's going to be some disclosures, because the code does provide language for as long as the vendor agrees and accepts that this is customary reasonable, then that can be determined to be a reasonable and customary fee. But there's going to be some disclosures and things needed to make sure that that is accepted, so they can't come back and say, okay, well, this is not my reasonable fee, and you owe me $300 for this, and you violated the Dodd-Frank Act, and I'm reporting you, and you got to pay me $10,000 type scenario. Covered transactions. So HVCC, because this is kind of like what we're all comparing this to, is very different than this, in the idea that this is encompassing all. This includes jumbo. This includes closed-end loans, home and equity lines of credit, all. So this is not just specific to Fannie Mae or specific to Freddie Mac or specific. Basically, all consumer loans that are secured by a principal dwelling, which is a house. Independent appraisal process. it really goes into exactly what is needed as far as the basic, parameters around what our clients are, what is needed to prevent a compliant process. So, anybody who works for the lender cannot have the function of, recruiting, selecting, retaining an appraiser, contracting with a person to prepare evaluation, managing or overseeing the process and preparing evaluation, reviewing or verifying the work of a person that prepares evaluation. So anybody who has a financial interest in closing, in this transaction cannot do any of those. So it really becomes, how do you set up your company to do that? Now, if you go to an AMC, usually it will be a little easier. If you keep it in-house, you're going to have to do some things that will make it a little different. So what happened to the HVCC? The Dodd-Frank mandates that the HVCC shall have no effect once the board issues the final review. The new law is much stricter than the HVCC, and the violations are against the subject to penalties up to $20,000 a day. The HVCC is diminished. However, the spirit of the HVCC remains in place for the foreseeable future. Even Fannie Mae issued some guidance along it maybe a month and a half ago, that essentially the spirit is going to be there. Their regulations coincide with the Dodd-Frank. However, it's very somewhat similar. Okay, so what we're going to kind of do is, go over some processes and procedures as far as, what would your office or what would your ideal situation look like if you kept it in-house, or what are some questions and changes you should make if you keep the appraisal process in-house, and what should you do if you use an AMC. I'm going to give you an example. There's a client of ours who took the process in-house for his Allied mortgage, and the guy, Jerry Henson, who runs Allied's appraisal desk, is the perfect example of a compliant appraisal process, both for the Dodd-Frank and really the HVCC. Jerry is a licensed appraiser, certified, and has a lot of experience for many, many years. They have a compliant software. They have their own office set up. They have a couple processors, a couple administrative people to help. It's separate and apart from all the branches at Allied, so it's in the main office. There's really no production staff. And it's really not associated with any of the production staff in the entire company. It really is a really independent process. Think like, and this is where, a lot of times we see where we go into a client's and, this is their HVCC compliant process, and it's just a processor moved through the appraisal desk who orders the appraisals from a list, provided by the loan officers. I mean, that's reality of the situation, and that's not going to cut it. It needs to be a separate function of the business and not directly related to the day-to-day. Think separate office, think separate manager with QC procedures, operating procedures, firewalls in place. I know a lot of people have taken advantage of the software capabilities by using like eTrack or Oasis software by Global DMS and my buddies over there, which is really kind of a great way of putting the process in-house if that's what you want to do. But there are some things that need to take place to do that. It's not just, oh, we have the software, we're up and running. It's because at the end of the day, if one thing that they're going to really do that they didn't do previously is audits and really coming in there and looking at what you have in place, your operating and policy procedures. I cannot tell you how many times I've gotten calls from people saying, look, our investors are in here right now. They want to see a copy of your guys' policy and procedures for running the office. Or secondly, we keep it in-house. We need a policy and procedures. We're working on a policy and procedures manual for all regs right now for that, where, this is what we have. This is the policy and procedures we have set up to be compliance with the Dodd-Frank. Here's our processors. Here's the review appraisers. Here's how we select appraisers. You're going to really need that information ready. So it's a little different, and it really is a lot more strict. If you're going to choose to use an AMC, not all AMCs are created equal. Nor because you are an AMC does it mean you are compliant. Just because you have, the AMC staff use third party, but it does not necessarily mean this is much different than the HVCC. And it's not just having the firewalls in place, but it's really having the policies and procedures and overall processes in place to ensure. I mean, things like the customary reasonable fee, getting the borrower a copy of the appraisal, making sure that the appraisals are QC'd. All those things need to be in place. Would recommend visiting for anybody who's using an AMC. Would recommend 100% visiting the AMC's office to see and meet the people you are dealing with. There was a situation where the lender was using an AMC, and then it turns out the guy was working out of his house, and not to do anything wrong with that. There's nothing wrong with that. Was working out of his house, had no staff at all, was the only guy, and he was, doing an RFP to get with a major client. 100% recommend visiting the AMC's office. A lot of the clients that we deal with do it as part of the RFP process. They'll fly somebody in. I would say about 99.99% of the time that is a free trip if you tell your AMC that you want to come to their office. They will pay to do it, because I know we pay it for our clients to come and see and take a look at our office and meet our people and see what we have in place and things like that. Would highly recommend it, meaning ultimately they're going to put the lender and the bank responsible for being compliant with the process. So because of that, if you're getting fined up to $10,000 a day for the first offense and $20,000 a day for the second offense, wouldn't it make sense to spend $500 in 2 days to go visit the company that you're going to put your eggs in the basket as the process? Or reverse, if you're going to keep it in-house, if they're going to make this law, you really do have to invest a lot of time and money into the process and work with the right people to get this thing set up right. A lot of times, if proper planning doesn't go into it, you're stuck with kind of this half procedure that's really not in the best interest of the company. Fannie Mae's position. So, this is not in order, but HVCC diminished in replace of interim rule. New appraisal independence, that's what they're kind of calling it. New appraisal independence requirements, or AIR, are being developed to replace the HVC and will be substantially similar. No significant changes, but rather requirements, firewalls, and languages. The Fannie Mae's position is the lender is ultimately responsible for delivering a warranted appraisal that's compliant to Fannie Mae. So they put that, guys, on you. They're going to enforce this, and this is something where Fannie Mae really hasn't done this previously, is they're going to really enforce this by doing audits of the lenders and really going in there and seeing what you guys have in place or what lenders have in place for this new process. It's kind of and this is where we get back to really set immigrant office in my example with Allied and Jerry Henson, where they would have no problem with that. I mean, they got a corporate office, 300-400 branches. They've got, the corporate office, really no production staff that work in the office. No underwriters really. Well, there could be some underwriters, but just they have a separate office that's designated as the appraisal compliance thing. It's totally, it's on the other side of the building type scenario. They got Jerry, they got a couple processors that really take care of the whole situation, and so it's a great setup for them. Some of the other ones where it's really, they're right next to all the processors, right next to all the underwriters, right next to all the loan officers, is really not a great setup. And my ultimate question all the time is, why risk it? You're really dealing with opening up a can of worms where if Fannie Mae, comes and does your audit and they say your process is not compliant, we don't, your underwriters are right next to your processors who are ordering the appraisals. How can we be sure? The loan officers are right down the corner. We're going to sell you back this loan. And how are you going to prove that this is compliant? And that's where it becomes, if you're going to do the in-house, talk to the guys over at Global DMS and get the software set up. If you're not, talk to an appraisal management company, a good quality one that'll work with you guys and make sure that this is taken care of. Summary, we do these things quick. So the spirit of the HVCC will remain the same. However, there will be some operation and policy procedures that change that we need to take place either in-house or AMC. Generally speaking, it's going to be disclosures language. Okay? You got to go through the 132 pages. Don't have enough time here to go through a whole thing for you. Generally speaking, there's going to be disclosures with fees, language, review processes, click-throughs for appraisers on what's a customary reasonable fee in case there's any discrepancies on that. Things as, policies and operating procedures to make sure you have everything in place, as well as making sure that your AMCs or whoever you're using is in place properly, and that if you're selling to Fannie directly or you're selling through an investor, that the appraisals are warranted properly with the certificates. All those things need to be written out and in place so that in case everything comes back, because it doesn't happen that often, but the one that does can cost you $250,000 plus the $10,000 a day in fines is going to be significant. So it's a small steps to prevent a big failure. Fannie Mae investors will take a much more active role in ensuring compliance with the new regulations. And the reason it's because it's a law. So these are becoming a law. Just, speeding, driving drunk, all those kind of things. This is really becoming a law. So it's a little different than what it was before. And I know some people ignored it, where they wouldn't really. They did it, but they didn't really do it as much as they should have or they could have because they thought it was going to go away. And this is where it's really solidifying it. Like, no, this is law. This is something you have to abide by. This is something you really have to take note of and take care of. Is unlawful to policy procedures should be taken more seriously. It's information about us, Coester Appraisal Group. You go to our website. Go on our other websites. We have a special program for reverse mortgages. Severity appraisers nationally, 100% guarantee on all valuations, all that kind of good stuff. Okay, a little Q&A. I'm doing this by myself, so it's going to be a little differently. We usually have 2 people on the call for Q&As. So if you have a question, I will try to get to it. And if anyone knows, this PowerPoint will not be available to email, but this presentation or a shortened version of it to go on YouTube will be available online via YouTube, and I'll send out a blast when we do all of them. If you subscribe to our YouTube channel, we have all kind of good stuff on there. So you can go to our website and subscribe to our YouTube channel, and you will be very equipped because we got all kind of stuff on there of webinars that we've previously done. So if you have any questions, I don't really know how to look at this to see if there are any questions because Crystal usually does this. But, if you have any questions, let's just do this. You can email me directly, bcoester@coesterappraisals.com. Phone number is right there, and we will be happy. I will be happy to answer all your questions. I will get back to everyone just because it's important. So I don't know how to work this question and answer thingy. So if you just email me, I will get back to you because I know how to do that. Thank you, everyone, for joining us. My name is Brian Coester, and we are signing off. Have a good day.